welcome now Kush Bora, founder kushbora.com, in our studios this Monday morning. Parag Thakkar, head fund manager of Fort Capital, also joining in the studios. Great to have you here, guys, as always. Sony Patnaik joins in, AVP JM Financial Services. Sony, since you are not in our studios, I'm going to start with you so that you don't have, they don't miss out on all the excitement we are seeing over here. Can we have the bulls in charge this week? What's your take? Let's start with your index take first.
Hi, good morning, everyone. Thank you for having me on your show. Yes, I think, just to simply put it to your question, I think, yes, the bulls can take it in charge. We have seen a strong close above a 200 DEMA for Nifty, which is above its 23,400, 23,500 support. So I think that support may hold for this week as well. Ideally, before all the global impact that we saw over the last 1.5 weeks, before that Nifty, I was heading towards 24,000 before all the drama happened. And, I think it's reiterating to those levels back again. So anywhere towards 24,000 to 24,200 is a range where we can see for Nifty this week. And the support has risen towards 23,500. So any dip that you may see towards a 700, 650 range can ideally be the accumulation zone or a zone where you can reinitiate your longs. Keep a stop loss of 23,500 on a closing basis, and towards 24,200 one can look forward to book profits and again buy on declines. I think that's the strategy to go forward. And there are multiple stock specific strategies that also one can apply, and both could be on the longer side.
All right, Sony, before we get to your picks, I think we should talk to Kush as well as to whether or not he sees that momentum. And last week we were talking, of course, curtailed week trading-wise, but then, if I remember correctly, you were talking about buy-on-dip strategy. Yeah. Does that exist right now, or do we see some bit of the steam fizzling out?
Sure. So first up, bonjour. I think the tone of the day is French, right, today, so...
Guys, my legs are long enough.
We'll keep pulling them all day long. So, no, but the tone of the market, thankfully, is green, right? Just to answer Alex's question very pertinently, very pointedly, yes, the texture of the market right now is buy on dips. You could see the extension of this rally. So let me give two views on the market right now. If you have a long position and a slightly medium-term view, then by all means continue to ride your long positions. No harm, the momentum could well continue. You could see some volatility. But if you're looking to create fresh long positions, that's when you should wait for the dip. 24,000 is a bit of a resistance. The 200-day moving average also resides somewhere close to that. Call writing also seen around those levels. So you could see some pause around that level. But as I said, that's most likely to be a pause. 23,500, 23,600 thereabouts is the support. So if you get a pullback closer to those levels, the risk-reward ratio will be a lot more favorable. So yes, the buy-on-dip strategy continues for anyone who's looking to invest or create long positions of fresh. If you've got long positions, continue to hold. You might be sitting on quite a handsome profit at the moment. Keep trailing stop losses in place. But on a broader picture note, I think I would have ideally called the bottom on this market, with the kind of moves that we've already seen. If it wasn't for the Trump volatility and the impending, yen carry trade fears, which not too many people are talking about right now, but continues to linger on. Anyway, we discussed as the 21,500 to be the bet your house kind of a level. We came very close to that 21,700 thereabouts. So I think we'll take that, 4,000, 4,500 points from the top. If we do revisit those levels, then it will be a good idea to start accumulating, or perhaps even, as I said, philosophically, bet your house kind of a level. That view still remains. On the whole, from a very near-term perspective, Nifty's hit overheated territories on the shorter-term, charts on the momentum indicators. What's happened is that because of the weekly expiry, the PCR has been reset, and there could be an extension of this current rally. But that's about it from a near-term perspective. If any fresh positions have to be created, they should ideally be done on dips. As I said, long positions from a positional standpoint continue to hold on.
What about stocks is the key question, right? Sony, I'll come to you first. What are the stocks that you are giving out in such a quote-unquote bullish scenario?
So, Neeraj, it would be both our official recommendations, actually, which we have recommended to our clients of JM. The first buy pick comes in CDSL. So, the strategy is to buy at current levels with the stop loss of 1190 and a target towards 1320, 1350 can be seen. So, the stock has given a decent close above its short-term moving average. And also, if you look at the option chain, it has given a very strong option chain breakout above a 1220 level on a closing basis. So So based on these positive parameters, we are recommending a buy in CDSL for 1320, 1350 targets. The second buy pick is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout, and the targets would be towards 6,900 to 7,000 levels. So one can take a buy at current levels, keeping a stop loss of 65.50 and a target towards 6,900 to 7,000 levels can be seen.
Okay, Kush, what about your picks this morning?
Still going with both trades on the long side. Financials have to make the cut, right? I mean, with the kind of moves that you're seeing. So this time around, it's Canfin Homes. Good run up. The stock seen, a goodish bit of recovery. There is a rounding bottom formation, resistance near the 700 mark, which was taken out on the back of good volumes in a curtailed, trading week. So on the long side, you're looking at targets of 725, 740, and 697 is your stop loss. From the power space, GMR Power. This is one stock which also has completed the rounding bottom formation near the 132 mark. Here also you've seen good delivery volumes pick up. There was a gap up trade, but that has sustained over the last week. So from a long perspective, 138, 142 are your targets, and 130 is where you place that stop loss.
What about an ICICI Bank? Would you still buy it, Kush?
Very similar view to the bank Nifty, which I think I didn't discuss in detail, which is that, incidentally, bank Nifty has moved 12.5% from the lows, which is, or rather 14%, I'm sorry, which is actually higher than the mid-cap index, which has gained only 12.5%. So the move has been stellar. But the view is very similar to what it is on Nifty. The rally could well continue, and it will in all probability continue. But do you create fresh long positions? I'm not so sure. So a buy on declines is a prudent approach. The same thing applies on the likes of HDFC Bank and ICICI Bank. Buy on dips is the strategy for fresh positions.
Where is the dip going to come, Parag bhai? Where is the dip should be a likelihood as well. After you've seen the results this weekend, what do you reckon? Do you think that this extent of positive, commentary on the results has been priced in already, or there's more to go?
Yeah, so basically, if you remember, last many shows, as Neeraj was also saying, that I was always constructive.
Yeah.
In domestic-facing stocks like banking, cement, these were my, or NBFCs for that matter, good NBFCs. So I would say that I would completely agree with Kush. I could not agree more that I would not jump and buy today because the numbers are good. Definitely, and they were priced in by this 14% move in Bank Nifty, especially in large caps. And see, my principle is this, that when others are fearful, you have to be greedy. So I was greedy at that time, and now I'm fearful.
You're fearful?
Means I'm saying that I'll not buy. I'm not saying that I'll sell. But I'm not going to buy on today's 3-4% gap up opening.
Basically, you're going to look
banks,
at this.
you mean?
Yeah. All the banks are going to open gap up, right?
You're seeing a 3-4% gap up opening for the banks today.
No, it might happen. I'm not saying that it might happen. The ADRs were up, right? So I'm saying that if they open 2.5 or 3% up, I'm not going to jump and buy because remember one thing that in February the rate cut started, right? And then in April again there was a rate cut. All this will play out in June quarter. So there will be some margin compression from here on, which has not played out in this quarter.
Okay.
To mitigate this, banks have reduced deposit and saving rates, because all thanks to RBI, which has given a fantastic liquidity cushion, so that deposits are easy to come by. And so banks have been able to reduce deposit rates and SA rates both. Which will to some extent mitigate the margin pressure. But I would say that still, I think margins for large cap private sector banks, we might be staring at some decline going ahead as that will be a quarterly phenomenon. That will be a quarterly phenomenon. At the end of this cycle, again, the NIMs can stay here.
But how is it that ICICI Bank, for example, has actually not spoken about that at all? In their con call, they have largely sounded very constructive, even as HDFC has said that they might see some pressure.
So basically, ICICI Bank, after Mr. Sandeep Bakshi has done phenomenally well. I know when he came, the stock price was 300. Today it is 1400, it is going towards 1500. So he has made the stock 5x. He and his team, the entire ecosystem, right? They have done phenomenal job. So this quarter also, see, their SME portfolio, business banking, which is what they call it, has grown by 33% YOY. Right, so that is how they have protected their NIMs, in spite of very low loan book growth, right? Because they went and landed to a segment where it was a secured segment and still was yielding higher margins. So their NIMs are 4.41%, right? So they continue to do this every time they surprise. How they manage to surprise the entire street so well is something which is very, very commendable, and full marks to Sandeep Bakshi and his team for that.
Yeah.
So I don't know whether they come out with something which is not known today and again protect the margins next quarter. One thing which I can make out is they have reduced their CD ratio this time. So they again have an operating leverage now. Their CD ratio is now 83-84%. So they again have an operating leverage. They don't have to grow the deposits in line with advances, which many other banks will have to do.
Just on the contrarian view that you're talking about, Parag Bhai, would that apply at all to an Infosys? I'm saying because the expectation was of a weak quarter, and on those metrics is there. Maybe some would argue in relative terms, not as bad. The worst is baked in, built in. Would you apply that at all to any of the IT pack and an Infosys today?
So I was always saying that I only have one IT stock in the portfolio, in the entire portfolio, which is TCS, which is 5% weight in our portfolio. So on overall basis, I am strongly underweight IT and any other US facing businesses in my portfolio, I would say, because still this entire tariff saga is on. Imagine now, if you are in US and if you are a Walmart, how would you spend money now? How would you do a discretionary spending now? You don't know your costs. It will only get, once US and China settle at something, or on 9th July when reciprocal tariff gets, withdrawn and reciprocal tariff thing, it settles down. It is very difficult to imagine that US consumer is going to increase his discretionary spending. So till then there is an overhang. There can be trading rallies in between.
Yeah.
Because when market gets oversold, definitely there will be some people who will do value buying, and so it will recover by 7-8%. But as a structural theme, I would still like to be a little bit cautious on any US facing businesses for that matter.
What is pretty clear is that you could see some pressure in Eternal. The counter is in focus after its board has approved an FII ownership cap of 49.5%. Now, we're going to look at this story from two angles. Mahima and Somit are both joining me on this. One is, what is the strategic aspect of why Eternal, which is Zomato, of course, now known as Eternal, wants to go ahead and cap the extent of FII participation in its stock? And then Somit also coming in to tell us why this is going to be a down day for Eternal at the start. But Mahima, let me start with you to understand strategically why Eternal wants to do this.
Right, so there are two things here. As you rightly mentioned, the board has approved an FI ownership cap at 49.5% from 100%. And the second thing is that this will also lead to an inventory-led, and this will likely gain focus post the FI overall holding is trimmed. Now, in terms of what has happened so far where fundraising is concerned for Zomato, Zomato had recently come out with their QIP and raised around 85 billion. Now, in terms of that, 8% was subscribed by leading DIA funds, and post the QIP, FI ownership fell to around 47.3%. DI ownership increased to 20.5% versus that of 17.3% earlier. Currently, DI ownership stands at around 23.5% and FI ownership stands at around 44.4%. Now, what does this lead to overall? Increase in domestic ownership will overall aid data localization norms, also see control over inventory and safeguard local consumer data as well. An inventory, heavy-led model will also have better control over product, quality, pricing, improved consumer experience, higher margins through bulk procurement, easier promotion on private labels, as well as enhanced delivery-led time as well. But there are also changes where the overall inventory-led model is concerned. It requires stronger grip over operations, requires higher working capital in order to store the inventory, and the risk of unsold and obsolete inventory will be high and might negatively impact the overall margins as well as profitability. Now, Elara did come out with a note on this. They've maintained buy with a target price of 300. What they're saying is that Nykaa follows a similar model, and because of which they've overall enhanced customer experience. And the entire story that Zomato is now trying to trim FI ownership also indicates that Amazon and Flipkart are preparing for their IPO as well. So this is the overall view as to how and what will happen to FI holding in Zomato, and that is Eternal.
Somit, in fact, let's just get the other aspect of it. So it sounds like a good plan, right? There's a strategy behind it, but technically that board decision will impact flows today.
Yes, fundamentally it seems like a strong plan for Eternal going forward. But yes, because of this FI limit cap that the company is looking to put, there could be massive MSCI and FTSE passive selling that we could see. Not today, over a period of quarters, but yes, this is expected to come given the fact that there would be a cap on the FI limit, and there could be outflows of nearly $1.4 billion when it comes to Eternal. Now, why this selling is expected in Eternal, which is earlier known as Zomato? Because if you look at the difference between the proposed FI limit cap, that is 49.5%, and the current FI holding in Zomato is around 44.88%, which means that the headroom between the proposed cap and the current holding is less than 10%, and whenever there's the headroom is less than 10%, the weightage of Zomato or Eternal in the MSCI and FTSE index will come down, and because of this we could see this passive selling when it comes to the MSCI and the FTSE index. Now for MSCI, the current weightage of Zomato is around 1.33%, and this could halve, which could lead to an outflow of close to 600 to 800 million US dollars after the review, and this review might happen in May 2025 or in August 2025. So for when it comes to MSCI limited outflow, there is around 600 to 800 million US dollars of outflow expected, but when it comes to FTSE, the current weightage stands at around 1.17%, and whenever the headroom comes below 10%, it leads to deletion of a stock from the index, which means that Eternal will move out of the FTSE index, which could lead to an outflow of anywhere between 500 to 600 million US dollars after the first review happens, and the first review is expected to happen in June 2025. After that, every quarter, whenever the headroom is less than 10%, there could be outflows. So over a period of 4 or 5 quarters, there could be outflows of anywhere between 70 to 100 million US dollars for Zomato. So there would be the overall outflow of close to 1.4 billion US dollars when it comes to Zomato, because the headroom of FII limit is coming below 10% post the proposed cap of 49.5%.
Thanks a lot for that, Somit and Mahima. So that's well covered. Now, Parag Thakkar, the views are differing here, right? The stock is no longer at 280, but it's not at 200 either. Suffice to say, it might correct today or the short term. Now, is this weakness until the Zepto IPO comes out likely to stay? Because that's the other conspiracy theory. And would you use that weakness to build positions in what is arguably one of the many futuristic businesses in India at least?
So I would, so I have always said that I would refrain from commenting on these stocks because falls out of my circle of competence. But just to tell you, just to tell you
not a buy sell recommendation.
What is going on in my mind, I'll share with you. That till now we don't have position in Eternal. My thought process is that, as you very rightly said, that this long selling, I think it is $1.4 billion, which is around 13,000 crores spread across multiple quarters. So it is going to give us good time to study the business, good time to study the competition in the business from Zeptos and Swiggies of the world, and then take form of view. And I think we have to be patient enough and to buy after forming a very good view. And market is offering that opportunity. So I would take it as an opportunity.
I'm curious, Parag bhai, now you want to start studying Eternal, but knowing you have already looked at it very closely. Any reason why you've stayed off a stock everyone is so excited and bullish about?
Yeah. So basically, so ultimately I want profits. That is my key thing. Actually I was very bullish in between, but when they bought Blinkit large stake, and Blinkit was also burning cash at that time. Full marks to the management of Zomato for turning the Blinkit around very fast. And so that is why the stock got re-rated, and today market cap is around 2.2 lakh crores. So I think sometimes, you cannot have a complete control. And as such, as I told you, I accepted that my circle of competence in this kind of businesses.
So Eternal was a miss for you?
Yeah, you can say that.
Okay.
You can say that.
That's what I love about you, Parag bhai. You're like very honest about it. On the chart, Sony, on the charts, Eternal?
So, Tamanna, we can see the stock actually has recovered and given a strong close on above 215. So I think that could be a short-term support one can see just around the corner of 200 DEMA. So if it continues to stay or sustain above a 230 to 35 range for the day, possibility that it can head towards 250 in near term. In any way, I think 220, 215 is still that support level. So it has to be a positional play, not an intraday, and to continue up to 250 can be the targets.
Okay, very quickly want to go to Parag Bhai on banks, because he made a statement. He said banks relatively on the larger end, at least, you're going to be staying away. You did, you were bullish, you deployed a while back. Now you're going to sit and maybe look at the screen and smile. But are you going to deploy in any of the banks, given what you've heard so far?
Yeah. So basically, I would say that so Federal Bank comes top on radar, and I am not hesitant in saying that what attracted me to ICICI Bank after Mr. Sandeep Bakshi took over. I think in Federal Bank also same thing can happen with Mr. Manian, with Mr. Manian coming in. See, Federal Bank. Yeah. So I would like to say that it's a large holding for me with full disclosures. That there is a vested interest from my portfolio and my clients' perspective. So I'm not recommending for intraday or something like that. It's but I would say, see, all the basics are in place in Federal Bank, right? They have got a very good deposit franchise. They have got a very good calibrated lending. They are not over bullish on. They were not over bullish on microfinance or such sectors which were very juicy. So they have stayed away from that. They have stuck to their core, retail, SME kind of thing. They are already above 1% ROA bank, right? And now Mr. Manian will try. Of course, this year will be difficult because this year you are in a repo rate cut cycle. So I think, but from next year you will see improvement in ROAs also. They are well capitalized, very good balance sheet. So I would say that, and very attractively valued at 1.2 times FY27. So I think I am expecting wonders from Mr. Manian. Let's see. So other thing which I am betting on is IDFC First. Again, because of this capital raise, I feel that, of course, they will have some hiccups in Q4 and Q1 because of the microfinance exposure. But I think with this capital raise, that will be taken care of.
They've done 3 capital raises. The previous 2 at higher prices. If they have not been able to manage growth with earlier capital raises.
They have managed growth, but the problem has happened due to this microfinance book. So 900 crore is a loss.
So now it's sorted, you think?
I think in next 2 quarters it will get sorted, but that is already called out. The management has already said it, that it is going to happen. So in next 2 quarters it will fizzle out. And then now they will have enough capital. And third one after and this again I'm saying this is not in my portfolio, but the thing to look out for is Yes Bank also. I saw the results. I think they are doing basics right in terms of what a bank should do. That is why your loan book growth was minimal, but your profit growth was 63%. And profit growth was 63% because of control on OPEX and good asset quality, better asset quality. And so I would say that Yes Bank is something also which will be in my radar from now.
Okay. I'm just glad you brought out Yes Bank. It's a top gainer on the Nifty 500 this morning because of results. Kush, very quickly on charts, Yes Bank.
Well, you are seeing an uptick. I mean, that can't be denied, but it's not really given those kind of returns in the past. So hence the skepticism. But purely from a technical standpoint, 20-day, 50-day moving average taken out, you're looking at higher levels of 19.5 and even about 22 kind of levels coming in play. Stop loss comes in at 17.5.
I just want to mark, now we go to the big brokerage call, but just want to mark Divi's because I think it's starting off really well. 3.5% higher because of the large contract. And Eternal, because it was flat when we were speaking about it, but 8 minutes are gone by, starting off about 1% lower. But the big brokerage call for the day today is the BOFA note on Siemens. They've maintained an underperform on Siemens. They've cut the target price to sub 2400. It's opening in the green at 2846. Harsh, what is BOFA's rationale?
Well, 13% odd in terms of a downside, of course, to yesterday's or rather Friday's close, or rather Thursday's close. Now, in terms of the demerger itself, they believe that Siemens Limited actually worse off with regard to where the demerger is because they're giving away a very high growth segment. The energy segment, and they've broken down this contribution nicely for us, in FY24 has contributed to 37% in terms of order flow, 31% in terms of revenue and 35% in terms of profit after tax. It's the higher growth segment therefore. The 9 lakh crore capex just adds to the kind of visibility that Siemens Energy can bring to the table. They believe that energy is likely well placed to capture 50% of the market share in terms of large orders which are coming through, and therefore the opportunity is significant. Siemens Energy, in contrast, they're expecting just a 11% CAGR in terms of revenue growth, whereas for Siemens Energy, X-Energy is 11%. For Siemens Energy, it is actually 26% CAGR in terms of revenue growth expectations, so significantly faster. The X-Energy business could start to see earnings cuts, is what BofA is putting out. The energy segment contributes around 41 to 43% of earnings for FY 25 to 27. That's the expectation. They're valuing Siemens Limited, therefore, at 44 times earnings. And they're reiterating they're underperformed because the stock currently is valued at 52 times earnings, and therefore bearish with regard to this one.
Okay, thanks a lot for that. Interestingly, in the green right now, Siemens. Keep an eye out for that. Soni Patnaik, on the charts, anything on or the derivative positions on Siemens?
So, Neeraj, Siemens is also looking strong. In fact, it
Strong,
has a
okay.
good base around 2,700 odd levels. So, if it continues to hold that level, which is where we can find the maximum put writers, I think if it continues to hold, it can test towards 3,000, which is going to be the next level of resistance. The moment it's crossed and closed above the 3,000 mark, positionally stock can retest its highs of 3,400, 3,600 positionally. So I think one can continue to hold on to the longs with the 2,700 as a closing stop loss.
Okay, keep an eye out for the tech names. I don't know. We took the technical view on Eternal as well, but the Tata Elxsi's, Persistent Systems, KPITs of the world on the back of weak numbers from Tata Elxsi and commentary not looking strong for European automakers. Kush Bora, any trades here? Elxsi, Persistent, KPIT, and LTTS. Any of them?
If at all you've got to pick one, there'll be short trades only.
Of course.
On all of these. Tata Elxsi was one stock that we had recommended short on last week for targets of 4,700 and 4,600 with a stop loss around the 4,900 mark. That view still continues. There has been nothing at all.
Can you do a fresh one?
Absolutely. 47, 4,600 target, 4,900 stop loss, 1:2 risk reward ratio, volumes going up on the short side. So yeah, Tata Elxsi is a short.
Sorry. Go ahead.
I was just wondering about Cipla because there's good news or relatively no news is good news kind of a situation for one of their plants. It's up about 0.6%, moved very quickly. Is there a trade here, Kush?
I'd wait it out. 1535 is where the rounding bottom resistance comes up. So if that is taken out, during the course of the day, then perhaps. But otherwise, you could see, some profit booking coming in. It's already seen a very sharp up move. Plus, as you said, no news is good news kind of a trade is not really something that you'd want to play in this sort of a market. You'd rather prefer more clear, up moves. So for me, this is a book on, sell on rise kind of a situation right now.
No, sorry. What I was asking you is that, what is the Nifty trade? I think the most exciting trade this morning after the pre-open is going to be the Nifty. 24,000 in view. And then now how do you open?
See, 24,000 is more of a formality now. Even if you hit that, it's a done deal for all money. Bank Nifty all-time high, so done deal. You take profits off the table and you wait on the sidelines for a dip. As we were discussing offline, the dip is perhaps just one headline away, so you don't know when that will come about. But yeah, a buy on dips is what you should implement on Nifty and Bank Nifty right now.
I mean, we should have a little more fanfare at this juncture because we have hit all-time highs, or we will when things open up. Obviously, we're talking about a 1% up after the pre-open trade for the Nifty Bank at 54,891. Let's see how far we go today. And that's, of course, the Nifty 50. Take a look at the Nifty Bank because we were just about 177 points away from the all-time high at the close on Thursday. And we've, as things look like right now, up about 600 points, Neeraj.
Yeah, well, this is what very interesting times look like, that the largest sector by weightage is doing well when all of last year, 2024, it was largely written off as an underperformer. And boy, are the banks coming. I must say, it's not that HDFC Bank has really come back to the fore as much, but some of the others are certainly doing really, really well. But here's how we are starting off. 1/3%, Bank Nifty 1% higher. IT, I reckon, should be underperforming very quickly. Just pull that one up as an index. And then instead of going to mid caps and small caps, or maybe we can do that as well. Nifty IT, 1% in the green. Very interesting. Keen to see what's looking on the heat map. Mid cap, small cap, very quickly. 0.5% higher. Okay, green all across. Let's get the heat map and show you what stocks are actually dragging the index lower. Okay, Adani Port down 2%, HDFC Life, Eternal, Ultratech, Asian Paints, HUL. So FMCG looks like the one which is pulling the index lower a little bit because IT and banks are doing okay. Tech Mahindra and Infi, both of them. Wow, there's something happened in IT today. Techem, Infi, HCL Tech, Wipro, all of them in the green. Is it got to do with some bit of trade deal that India is signing? I couldn't think of any other reason. I mean, I'm missing any reason why this is happening, but clearly there is concerted buying happening in IT. We thought banks would be the showstoppers. I must confess, IT is the showstopper right now. Tech Mahindra is up 4%. Infosys up 3% on the back of those results. Nothing dramatic about that. Is it that the correction has been done quite a bit? HCL Tech, Wipro, everything in the green. Not to take away the fact that HDFC Bank and ICICI Bank are in the green, coupled with Axis Bank and SBI. I can't take my eyes off IT. Okay, Adani Port is sulking really badly on this deal, 4% lower, 3.5% for that one. And HDFC Life is reacting to numbers. Eternal, a muted 1%. Let's see if there is more in store. But this is quite dramatic, really, what's happening in IT this morning, Tamanna.
Yeah, I mean, what we discussed earlier, maybe overdone on IT selling. And Infosys has not disappointed as much as expected. That could be one reason. Tech Mahindra will report, of course, this week. But Bank Nifty is the stellar move, has hit an all-time high. And look at the leaders over there. AU Small Finance Bank contributing to that. IDFC First contributing to this. Remember, IDFC First under pressure because of further equity dilution, but the street liking what it sees and looking for new leaders in this space. Axis Bank as well joining that party. HDFC, ICICI Bank is a no-brainer there, but of course that's moving ahead very strong. IndusInd has had some changes in the top deck of management that have been announced, and that stock about 2% up. Kotak Mahindra Bank the only one in the green. But let's look at the broader indices as well. Is this just a Bank Nifty and Nifty story? No, you have 0.5% up on the Nifty Mid Cap 150, the small cap also about 0.5% up. So not a bad morning at all. I'm waiting to see if the Nifty hits the 24,000 mark in the first few minutes. We'll keep an eye on that for you. Let me pull up the sectoral indices for you very, very quickly. And it's the banks that are going to be dominating there. The Nifty Private Bank 1.5% up, Bank Nifty up as well. But so is Nifty IT. And this is interesting about the kind of up move you've seen. Has the complete sell-off in IT been done now that the results are over, at least of the top three? I suppose that's the question the street is asking. Is the picture not as bleak as it would seem? Nifty PSU banks also doing well. So the top line is all about BFSI with IT there supporting as well, which is why you're seeing inherent strength in the markets today. But let's pull up individual stocks and look at what's happening there. So we told you corporate results is going to be in focus this week. Let's pull up what's happening with a clutch of them that have reported over the weekend. A Yes Bank, Just Dial, Tata Elxsi make the cut there. Just Dial and Yes Bank, both stellar set of numbers. And especially Just Dial, much better than what the street expected. 8% up this morning, could well be the stock of the morning. Tata Elxsi and Mastek actually were not a great set of numbers, but the mood seems to be very positive on it. Mastek now dipping in the red. Divi's Lab has been in focus because of a large contract that was announced, 4% up on the stock. JB Chemicals has an approval for a new drug. That stock reacting mildly, just about 1% up. Oberoi Realty booking numbers weren't that good this quarter. The stock about 2% down. And we're seeing Devyani International as well. And acquisition news has come in. That stock about 2.5% up. So you have some movers there, but the broad move quite positive this Monday morning, Alex.
Absolutely. I mean, you can look down the list of the stocks, of course, but you have to mention the Nifty Bank at the start. 800 at nearly 900 points, 1.5%. This was expected, but I want to talk about the unexpected at this juncture. We have to. Let's pull up the Nifty IT to see whether it's still holding up. And wow, it is. In fact, so 300 points. And what's contributing? You have the likes of Tech Mahindra, which has cooled off just a tad bit, but it's still up about 2.4%. You have Oracle, you have Coforge, Emphasis, HCL Tech as well. Some of these stocks, Infi, by the way, it was being written off and was a thumbs down based on the outlook for the new financial year, and in fact the fourth quarter up about 1% or so. So Kush, I'm just wondering if anybody had placed a bet, how do you extricate yourself? Because I'm guessing that the bet was placed on the downside for IT. Do you extricate yourself very quickly, and what is the potential on the upside?
You stay put, Alex. I think this is more of a FOMO rally. This is the only sector which had seen consistent negative views, be it from the fundamental side or technical side of things. This is more of a short covering rally. You look at something like a TCS, it's already in the red. Infosys has given up most of the gains, of the open. Not saying that, this might, end today itself, but the broader play is on the short side. So if you've got a short trade on it, even if your stop loss levels are triggered and you have that risk appetite, you might want to just push those stop losses higher and stay put on the short side. That's the broad view on the IT. Nothing yet to suggest that something's changed dramatically. It's just, as I said, a FOMO rally, a sharp spike up, but most of the gains already being given up.
Yeah, starting to be given up actually. Just the Nifty IT. Just keep that one because that is certainly doing well. But there are a lot of individual stocks which are doing very well. So Sony Patnaik, initial thoughts, anything that stands out for you? Couple that up, of course, Sony, with a view on either Divi's Lab or Just Dial. Both of them are standing out, as is Yes Bank, of course, but I'm sticking to Just Dial and Divi's Lab. And of course, anything else that you've spotted.
So Neeraj, first covering Divi's Lab, I think it's still facing the resistance around a 5900, 5950 range. Until and unless that resistance is not taken out, long side could be difficult. So I think it's wise to wait for the resistance to be taken out. Then only above that, we can see it heading towards a 6200 sort of a level. So I think it's just wise not to enter into any long trade as of now. Talking about Just Dial on technical charts, I think it's not on derivatives, however, but it seemed to have crossed its 200 DEMA today, and anywhere towards 1000, 1005 range, if it crosses on intraday basis, may continue towards 1050, 1070 on a positional trade. So I think as long as it holds above a 980 on a closing basis, the stock may head towards 1050 plus levels. And to answer to your third question, something that would have spotted my eye, I think, since morning, I would still stick to my Naukri's trade that I've recommended in the morning, which is actually very close to its target one, up about 2% And I think one can continue to hold on to the longs for a short-term trade towards the 7,000 second target.
All right. So that is a review of Sony's pick from before the start of trade. Info Edge. Keep that on your radar. I just very quickly want to pull up Nifty IT just once more to see if there's a further cool off. Let's see where it is right now. Let's pull up the intraday chart if we can. It has in fact cooled off quite dramatically. Still gaining about 1%. Let's keep that on your radar though. GAIL is a stock that is up and about 3.5%. At one point it was up 4% at the start, and it is in fact up 4% as we speak. The update is that the Petroleum and Natural Gas Regulatory Board has released a consultation document for the review of GAIL's integrated network tariff. The implication, of course, is that it's seeking comments from stakeholders by the 1st of May 2025. It will then submit its responses by the 16th of May, after which there will be an open house discussion. But the long and short of it is that there's an expectation that tariffs will go up, which is beneficial for GAIL. Any view here, Parag bhai?
So basically, just a disclosure that I don't own GAIL in my portfolio, but the thing is that I have studied this. GAIL has asked for a tariff increase for their pipelines, and which covers major part of their pipeline. So if the outcome is positive for them in terms of if they get what they've asked for, it will be a big material positive, because remember, transmission EBITDA is structural in nature. It cannot go down, it can only go up. So market will assign higher multiple to higher earnings if this really happens.
Okay.
And just to touch upon basically one of the other, I would say, is little bit overweight positions in my portfolio. PSUs is something which is broadly, yeah. So whether it is HL, whether it is NTPC, whether it is NHPC, many stocks which we like.
PFC REC?
PFC REC we have not bought, but I think energy basket, so whether it is NTPC or I would say GAIL, we have not bought, but I am saying NTPC, GAIL kind of things can do well. First of all, NTPC, like Bharti Airtel, has a structural earnings, right, which cannot go down due to recession or something. Ultimately, they earn regulated ROEs, right. So these are some of the hiding places also. and valuation wise attractive, strong operating cash flow. You are seeing EV demand growing, you are going to have a very hot summer. So I would say that stocks like NTPC or of course HAL, now everybody is bullish. So I would not like to talk too much about it. And see, if you see the DPAM secretary's statements, even PM Modi is very much focused on creating value for investors through PSUs, right? So that is a very clear mandate, I think. So you have to have PSUs, you cannot ignore them.
That's a good point, because this government has made it very clear they're not interested in disinvestment. They want to fix the running of PSUs and create shareholder wealth and want Indians to participate in its growth.
Correct. And see, PSUs have one very good thing. One, most of the PSUs have very good cash levels because they are not doing any acquisitions like private sector counterparts. So they are left with a lot of cash. They are under leveraged. And they are very genuine large businesses. If they are run well, they can create huge value.
Speaking of the power theme, another stock that is doing particularly well today is Taro, transformers and rectifiers, up 4.3% in trade today. Let's pull that up and just take a very quick technical check on it. Kush, any view here? And then I'll also ask Parag Bhai whether he has any view on this one.
So good moves. The near-term trend has turned positive. Also, it's taken some pause in the last week. So that's also a good sign. That's a healthy sign where the stock doesn't give you a one-way up move. There is also some pause along the way. So I think this is a good chance to accumulate transformers and rectifiers. You're looking at a stop loss near the 525, 530 zone, which is the low that the stock had made on Thursday. And on the upside, with this rally continuing, you're looking at 580. And then 610 as your target. So this is a good steady move, volume backed and with sufficient pauses just to avoid the stock from getting overheated. So could still be considered on the long side.
Any fundamental view on Taro?
On this is not a stock which is there in my portfolio at least. I would say that overall power sector looks interesting because of, I would say, in such scenario where everything is uncertain.
So actually, Parag, just come in on this. On Thursday or Friday, right, there's this whole piece about how for wind equipment, for example, the government will lay focus on getting the end-to-end procurement being done by made in India products, etc. Does all of this make, as you said, energy transition as a theme, but the pick and shovel instead of the actual gold? The mining companies more favorable. So would you look at the equipment manufacturer?
Sure. So case by case, bottom up basis, we'll look at it.
So what do you like within that?
So basically, up till now, I have bought only NTPC in my portfolio,
which is the generator.
Which is the generator, and more because of, I would say, and in my ICICI Pru days also, we were a big fan of NTPC and Bharti kind of stocks where the cyclicality of earnings is very low.
Right.
It's a structural earning which can only grow. Right, unless we have a COVID kind of scenario where also the telecom revenues don't go down, they actually go up. So, but I would say that so we like such businesses, and see, in the current environment where president of US is fighting with central bank Powell on whether he should cut rates and whether he'll fire him. On this kind of global macro, you would like to hide behind such businesses where at least your earnings are protected. Right, and in that this NTPC kind of thing actually plays out very well.
So, Sony, I'm wondering how you're feeling about an AU Small Finance Bank. AU Small Finance Bank, IDFC, IndusInd, I'm going back to the financials because that's the talk of the town, and I think more opportunities are being hunted there right now. So, any view on these three?
Yes, certainly. Just on a very light note, I think whenever I've given a view on AU Finance Bank, it's always gone the opposite. However, I'll still make an attempt. It's crossing a 200 MA today. It is just about to give you that option chain breakout. So anywhere above 605, 608 levels, if it's able to cross and sustain above it, a possibility that it can head towards 630 plus levels. And on immediate basis, 590 seems to be a good support. So if anybody is holding on to the longs, 590 has to be that trailing stop loss where one can hold on with the longs, and for towards 630 plus levels that can be seen. And overall, also the entire financial space seems to be leading and stronger in comparison to rest of the indices or sectors. And I feel that the entire rest of the April series and upcoming May series, we may continue to see this uptrend for the NBFCs and financial sectors.
Okay. You know, just the list of names in which things are doing well, clearly banks stand out per se. But Kush, I'm inclined to ask you about some of these power companies because that's an space that is standing out today. So transformers and rectifiers, Inox Wind, Suzlon, the clutch of names which are doing well in that bucket is fairly large. Anything that stands out for you?
So transformers and rectifiers we've already spoken about. So Suzlon, again, it's moving up, but it's now facing that congestion. So I would wait it out. Maybe in the clear of 60 and those levels, perhaps you could see a fresh rally emerge. Up until then, there could be a sideways consolidation, perhaps even a time consolidation that you might see on Suzlon come about. Compared to that, Inox Wind is much better placed. There are some resistances, but with the kind of volume action that you're seeing and the levels that it has crossed, all the long-term and the short-term averages taken out, you could look at a move towards 175 once that is taken out, a 188 as well. So between the two, Inox Wind stands out, from a technical standpoint. Suzlon you could very well hold, but with a stop loss around the 53 mark.
Okay. I'm just wondering, would you review anything with regard to your call on frontline banks based on the way that they've moved? I know that Neeraj just pointed out the Nifty Bank, but let's look under the hood, talk about HDFC Bank, which is up about nearly 2%, 1.87%. Let's also pull up ICICI Bank. Okay, it's come off a little bit from the high point of the day, cooling just a tad bit. But I guess that is also par for the course considering the kind of move we've had. So would you book if you were in?
Alex, I don't use this word lightly, but this is scary. The kind of levels, overheated levels on the shorter time frame that Bank Nifty has entered into. Typically, in the past, when it's gone into those overheated territories, it's seen a correction of 1,500, 2,000 points or maybe more. So that's why I was a little cautious and buy on dips on Bank Nifty. That was the same view today. Even now in fact, I would say it's not a bad idea to book it out completely, sit out.
So not good scary, bad scary.
Bad scary. Oh, absolutely. Bad scary.
The roller coaster ride is a good scary.
No. Completely sit this one out. You might lose another you might lose another 500,000 points on the upside just because of the momentum. But this is not a good place to create a long trade on the Bank Nifty at least.
I just want to know if Sony has the same view, because if you look at it, I mean, even fundamentally, you will look for a domestic-facing business that is going to, grow with what is still the world's fastest-growing economy. It is banks. Then you have those that are on top of their game. Why fear that?
Right, absolutely, Taman. I think I would also align with the same view, because also if we just look at technical or derivatives data for the entire index, I think it's sort of in an overbought zone right now. There could be some correction, some profit booking, but nothing to panic or fear about, because it's still above a very strong breakout level. So only any dip towards a 54,000 could be wise that one can reinitiate the longs. Although if anybody is already holding longs, it is also wise that one may look forward to booking the profits at current levels, wait for the decline towards the 54,000 to reinitiate the longs. Overall, the entire series or the upcoming series, I still feel that 53,500 to 53,000 range is going to act as a strong support, even if it has to be for the entire of May series. We may head towards a higher highs in Bank Nifty, but any dip could be the right strategy to go about for.
Okay, so a concurrence there from Sony and Kush. Be cautious and look at booking profits if you have a long position here. Parag Bhai is also nodding along.
Same.
Yeah.
I told that, I'll not jump and buy today. At least the banks which have, at least the large cap banks, because they have already rallied, and as I said, that you cannot rule out a possibility of 1 or 2 quarters of margin weakness going ahead. Plus, you have to also consider that globally things might slow down. And that will have its impact on, because see, a conservative banker will always see what is the evolving situation.
Correct.
And then try to lend. So the growth will anyway come down a bit, and there can be some compression in margins also. That's why I'm looking at second tier banks, which are where the valuations have not gone up so much.
Top pick in a second tier bank.
So as I said, Federal is the next big pick.
Just to quickly complete that view, what Sony said, that's exactly what even I'm trying to say, which is in the near term, the Bank Nifty is overheated. That's where it's looking scary. The structural issue hasn't really come up just yet. So buy on declines, 53, 500 thereabouts is still a good opportunity to enter. from a very near-term perspective, today, tomorrow, I wouldn't want to buy Bank Nifty, just to complete that view.
Okay, today, tomorrow, he wouldn't want to buy Bank Nifty. Thank you so much, Parag Bhai, Kush and Sony. This sets us up perfectly for our next conversation. We're keeping the focus here on BFSI because you've seen reporting from all of the top banks.